August 6, 2019, guys. Good morning. It's Tuesday, another day in paradise, and institutions are buying the dip. Temporary bottom is officially in, as portrayed in a Move 13 behavior that took place yesterday on August 5th after the market closed, and so far in very good position for that Move 13 behavior to continue pre-market. Now, this is actually not the best case from the trading standpoint because we really want that 13 move to actually come in as soon as the market opens. So unfortunately, this has already taken place for us trading options. This is kind of like, man, we missed on half of this really cool move that could have put a bunch of money in your pockets. However, with that said, guys, there's a ton of trades that we're considering today. AGN, REGN, Sage, Take-Two Interactive, BKNG, Amazon, all for a swing trade because we think the initiation of this green move today is going to continue into tomorrow before a potential sell-off tomorrow about 10, 11 o'clock as in a move 2 top formation. Now, not to disregard the fact that we could actually get a move 2 today right off the bat when the market hits a level of about 10:30, 11 a.m. So be very cautious. In other words, when we're talking about being overall bullish today, it does not necessarily mean that it is time to just jump all out at the open and buy a bunch of calls. Make sure that you stair-step and you pay very close attention to the time frames between 10 and 11 because it's going to look like the market is crashing again. It's going to look like the market is reversing. Everybody's going to be calling it the fake bounce and all that kind of stuff. So just be very cautious because that pullback, when it does come between 10 and 11, we want to see what institutions are really doing with it. If they're buying that pullback, that buying the dip behavior is going to be very much confirmed with the behavior yesterday after the hours. And so in that case, we want to go ahead and buy the dip if we're noticing that institutions are buying the dip as well. Now, generally speaking, here's the condition that we've got right now. And this is actually a condition for institutions to be buying this market. And this is a condition of too much negativity. There's just everything is negative in the news. Everything that you look at, everybody starts saying how it's, 1929. It's a crash. It's, but the institutional investors, they use this type of market condition as a partial thing on their checklist to actually begin to buy. And so we mentioned in yesterday's video that they don't buy their positions all in one shot. Institutions, they actually accumulate their positions sometimes over a number of days, sometimes over a number of weeks, sometimes over a number of months. So, but clearly this gives them the green light to go ahead and accumulate some bigger positions at this price levels here. And so we should expect this behavior to continue not just today, moving higher, but possibly over the next couple of days. But don't expect, again, a straight shot higher. Expect the pullbacks. The pullbacks are going to scare everybody off. The pullbacks, when the market is going higher, they're going to cause everybody to get back in the mentality of the crash. Oh, it's not over. We're heading lower, all that good stuff. So in this case, it's very important to observe these critical levels on these moves to really decipher whether that's going to be the case or not. So far, so good pre-market. We're heading higher. A lot of companies have announced some good announcement, and even companies that typically fall on their earnings, like for example the TTWO, Take-Two Interactive, right? It's actually holding in very strongly pre-market, which tells us institutions are paying attention again to what the companies are actually reporting over to just simply liquidating these shares on any type of news. So with that said, here's this Move 13 from yesterday. As you can clearly see, here's where the market closed. Right after that, we're getting a huge drop, hitting a low of 27.75. 75 is the lucky number. Right after that, we start turning around and heading lower. If you're in the middle of studying a 13 markets move course, make sure you spend some extra time today looking for this Move 13. Now, again, it's unfortunate that it happened after hours. What I was hoping that we would get is this move this morning. I mentioned about it in yesterday's video, but unfortunately has already taken place. Now, sometimes when these real Move 13s, they happen, as soon as the market opens, you're going to get a quick drop followed by a quick spike higher. And that's what makes you a ton of money. So majority of this move is gone, but it does tell us that the next move is higher. The probability of the next move is much higher rather than lower. So with that, some of the key trades that we're considering is buying AGN calls at the open. We're considering strikes of 160 to 165. If you look at the long time frame chart, or actually the daily chart opposed to the 1 minute chart, everything actually looks pretty bullish. One thing that really stands out to me on this chart, guys, is the fact that while the market's been dropping like crazy, look at this. This stock has barely moved from 165 to 160. So, in other words, it's been holding in very strongly in comparison to the rest of the market. You can also see, because it was able to hold so strongly, we're actually in a position of a bullish crossover on this thing right here. Now, that was also preceded by some really huge volume just a month or two ago. So all of these signs, they're very, very much in favor of the stock making the next move higher. Also notice last few days as the markets was selling off, it actually had a couple of days where the stock managed to stay in the green. Again, that is another thing that points out to how strong this stock has been in relation to the rest of the market. As far as the earnings report, it's good. It raised the earnings guidance. So the guidance looks really good for the stock, guys. There's a lot of good things here. Now, one thing that does not look good in a way is the accumulation distribution. It appears that they've been continuously selling the stock. However, if we took at another time frame chart, we're actually seeing there's some signs of accumulation becoming alive on the weekly chart. Also on the weekly chart, you can see that the RSI, despite the market dropping, is pretty much at the highest level on this chart of Allegron. And you can see that this last move is kind of, this is a bullish flag, right? So on the bullish flag, you can expect the next breakout to be higher. So exactly what are we targeting, guys? The stock pre-market trades at 160 so far. We think it can easily hit a level of 170. Start taking profits at 170. Possibility of the stock breaking out to 175 over the course of this week or by Monday. So 170, 175, basically targeting $10, $15 move higher in this thing as early as today, but it could take altogether 5 days for it to do so. Considering our EGN 295, 300, and 305 calls. Guys, this has been an all-time favorite of many institutions in the biotechnology sector. Okay, this level of 296 to 299, this is where the stock is trading pre-market so far. This has been actually a level of support for the last, I would say, 6 years in the stock. It's actually traded to 296 from about 20 bucks years ago. And once it got to that level, it kind of stalled out here for some time. It was trading between 290 and 320 for some time until it finally broke out and hit some levels above 500. So this is kind of a bargain point for the stock. Ultimately, it should bounce from here. If we look at a couple of charts, it really solidifies that. By the way, before I switch to the chart, look, somebody was buying a lot of these shares based on the accumulation distribution yesterday while the market was crashing in the expectation of a move higher in this thing today. So, and there's a couple of bullish things here if we take a look at the daily chart. As you can see, even though the stock has been dropping, now you see the divergence on the RSI. The RSI has slowly been grinding higher, and today could actually rocket significantly higher over 50, 55. Could be a very big move in the stock today. Also, both in the accumulation and the price action, we're noticing this reverse head and shoulder pattern, which is bullish. From here, we can definitely rally higher. REGN, from the standpoint of a weekly chart, there's a couple of bullish things as well. As you can see, this level where it trades now in the 290s, it's really been a solid level of support. And from here, last time it got to this level, it bounced to all the way to 390. So that's a $90 move. Pulled back to the 340 and bounced all the way to 440. So let's stay conservative on this. I think the move can easily come into a level of 320, possibly to 340. So our first target price is start collecting some profits at 320. Keep half of the position just in case the stock could really make a huge move and get to 340. Now the time frame of the move, 320 could be very easily accomplishable today. The 340 level, it could take till next week. So keep those things in mind as when you're selecting your time frame on your positions. Also, MACD looks like it's ready to take off and make this bullish crossover here as well, guys. So lots of things to like about REGN, including the actual earnings report. Now, Take-Two Interactive is another story, guys. Very solid move. I inserted this slide to just show you that some technology stocks, which this one is a technology stock, but it's heavily tied to gaming, right? It actually is solidly holding this move higher. What we've seen over the course of the last week, you have a lot of stocks make a pop and drop, pop and drop. This is actually the first case I'm observing where something after the earnings report is holding strongly. Now, because the move has been such substantial from 115 to 125, which is, looking at the history of the stock, this is a pretty solid move for this thing as far as the size of the move. So we're not expecting this thing all of a sudden to go another $10 after the market opens. Maybe there's a couple more dollars in the making here, the move higher, maybe 128, possibly 129, but from there it's likely to go sideways. Okay, so sideways to slightly higher on this one. I think there is no meat left on this trade, so it's better to just take it out of it, but not put any big positions here, just avoid it. Considering OLED 200 calls, this is one of those that popped and dropped on really good news. So we believe at this level right here, 195, 199, the institutions are likely to be buying the dip in this stock today. Now let's talk about the trade-in tunnel real quick, guys. Trade-in tunnel is officially has been broken to the downside substantially, as pointed out in this previous slide, right, of 27.75. Now the next level here for us to target clearly is 2,900. So from where we are trading pre-market at the point I'm recording this is 28.55. We can actually expect to move to the 2,900, but as you can see, that's where most of the sell volume was coming in yesterday. So it's going to be very critical. Are we going to be able to hold that level? If we, let's say, get above the 2,900, 2,905, are we actually going to hold this level by the end of the day? Chances are we can easily get to this 2880 level and just kind of stall out there and resume either the sideways trend or a pullback could start coming in at that point. So keep paying attention to these levels of 2880 and 2900. Yesterday, on August 5th, we did officially have a market move 3, guys. It opened with a gap down, very solid move 3 with great magnitude of the move. Basically, gap lower, continues lower. At one point here, I'm going to show you in the next slide, there was actually a huge probability of the reversal, but we ended up going lower. So let's take a closer look at that possible reversal that could have taken place. You can see intraday, we actually ran into a situation of this reverse head and shoulder formation. At the same time, you see how green this part looks right here. I've made a comment in the group saying that, hey, everything looks good here for reversal, with the exception is we're lacking one main ingredient, which was the volume. As you can see, while this very green, super green move higher started taking place and shaping a reversal here, it actually was not followed by a spike in volume, which is very important when we're observing these key pivotal turnarounds in the market. So in relation to the sell-off volume, initially when the market opened, that volume was substantially lower. Now going to the close, we actually had a spike in volume on the sell side, and that is why the market continued dropping after the hours yesterday. Now, 2-day sequence is 3-3. We're getting two very bearish moves back to back. This is how it actually looks on the chart. So they both start with a gap down, and this move in magnitude is not that huge in relation to yesterday's move. So 3-3 combination. Typically, we don't see a situation where we get 3-3-3, and this is exactly the case today. The market is gapping up higher already, so it's definitely not going to be a move 3 today. So 5-day sequence is 12, 9, 6, 3, 3. This is how it actually looks on the chart, guys. The most important thing I wanted to bring to your attention here is this part of the chart. Now, this is a 5-day chart, right? So what we've had is a situation that resembled like the market was moving higher here, and then it stalled out and it dropped. Now it's been dropping for a few days in a row. We're reaching the point where institutions are coming in and buying. Don't disregard this situation. From here could actually turn into a situation like this here tomorrow, meaning the market is going to go higher. I tried to draw it with this orange line. So market's moving higher, continues higher, making some intraday pullbacks throughout the day, but manages to finish higher, and tomorrow it actually reverses at about 10-11 and it reverses lower. So the probability of that is actually good. That's why I circled this for you, so you guys can have a mental image of this, of what could actually be taking place tomorrow, 10-11 a.m. Now the next market move, that is for today, August 6th, we're expecting a move 1, 7, or 2. Now the probability of a 7 is greater than any other move, greater than move 1 or 2. So overall, we're expecting the chart to kind of look like this today, where the market is moving higher, making a pullback, and moving higher again. Now tomorrow, exclamation point, this move higher could continue and it could stall out and it could start dropping. So with that said, that is why we're actually suggesting swing trading your position, buying calls today, selling them tomorrow, not necessarily all of them, but half of the position tomorrow morning before 10-11 o'clock, and then possibly being ready to reverse the position to the downside again until we possibly reconfirm this bottom again at 27.75. So these are the key critical things we're going to be taking a look at. Now, if we look at the historical analog of December, we had similar sequence, 9-3, where we had a lot of situations that were 3-3. Remember, there was a 6 in there, 9-3-2. Basically, there is still a probability of a couple of moves like 2 or 3 coming up. However, we could be in this circumstance where we're getting a 7-4 type combination over the next 2 days, which would make sense with the strategy we described of actually buying calls for a swing trade. Now, VIX is numerically high. It is uptrending, but the signs of a bearish reversal are present. So yesterday we pointed out that the VIX should not be breaking about 24-25 level. It looked like it wasn't even going to get there at one point. But it did end up reaching 24.81, creating a double top and a big gap down today. So far, pre-market holds the level of 21.5 rather well. So we could expect maybe not a huge drop in the VIX, but maybe a drop to about a 20 level. So VIX 5-day chart shows us the next levels on the VIX could be 20 or 18. The importance of actually hitting 18 on the VIX would be the fact that it would close this gap up that was created earlier yesterday. And if that does get closed right here, then we could be looking for a complete shift in the VIX and a downtrend. Remember, the main thing, when the VIX doubles over the course of 5 days, it is not sustainable. So a pullback is reasonable, right? But I don't think all this negativity is going to be taken out of the market overnight. It's going to take some time to recover from this. So I think some of the best opportunities are going to be presented by some move 2s here before the market completely recovers. But on a day like today, a 7 is your ticket to actually playing this market. So key takeaways: close any puts today, buy calls, be ready to reverse tomorrow morning in the event of a move 2. Watch for a pullback before 11 a.m. today as in move 7. Get ready, guys. Trade wisely, position yourself, and select strikes appropriately. Make it happen. I'll catch you on the next trade tomorrow.